Hello to everybody, our dear subscribers. We are back to you after a small period of silence that should be associated with Orthodox celebration of Easter holidays. All in all, now we are again with you, and today we will try to understand what really happens at the moment in the Forex exchange market, how to react to the incoming information, and of course we will try to more or less roughly predict future currency valuations in the major currencies. At the moment, the situation is a little bit tricky because, as you know, at the end of last week, the United States dollar was pretty solid, and despite of higher reading of gross domestic product from the United States that came at 3.2%, much more than expected, because you know the market's expectations was around 2.6%, but we should understand that this rise in the gross domestic product numbers has more or less a kind of one-off effects of, for example, a surge in the inventories numbers. And also there are some tricky moments regarding the situation, because at the moment probably inflation numbers should play much more important role. And in this context, we should understand that today's United States core purchasing consumer expenditure price index should attract a special attention of currency traders. And as you know, for example, Chicago Fed President Charles Evans already mentioned that in case of dipping in the core PCE price index to 1.5%, the Fed probably could make a kind of insurance cut, or even two of them. In this respect, this week probably the major attraction should be around the Fed's meeting that's scheduled for this Wednesday. It will be quite important how the Fed members will react to the last portion of economic information coming from the United States, how the Fed's chief, the president of the Fed, Jerome Powell, will behave himself during the press conference. It will be quite important. And today, this week, don't forget about two important moments. Once again, that's kind of low liquidity in the foreign exchange market because of Japanese holidays. Don't remember that also China has a kind of partial holiday this week starting from Wednesday. And don't forget about another important economic information in the form of United States payrolls report that's scheduled for the end of the week, and some important numbers like, for example, manufacturing and non-manufacturing surveys from Europe and China, and the first reading of European gross domestic product. All of this important information will come during the week, and in this respect, this week promised to be quite interesting and volatile. So be careful, tighten your stop loss, and now a kind of verdict of technical analysis. At the moment, as you could see, we re-entered a long position at 111.20 in the euro dollar. We suggest that despite of the fact of quite weak European economy, the room for another move lower in the euro dollar for us is looking really very limited. We don't expect that, for example, the euro dollar will go much lower than the level of 110, which is an important psychological barrier for the euro dollar. Let's see the situation with the euro dollar at the moment. Of course, there is a kind of immediate kind of downtrend at 112.70, important trend line. All in all, don't forget there is much more important barrier of 114.20, where lies moving average 200 daily line, and at 130.70 is another one of medium-term downtrend line in the pair. So all in all, from technical point of view, the euro is looking especially weak at the moment. Anyway, we suggest that the room for the dollar correction to the downside is open now, and in this respect, probably this week will be a kind of bearish one for the United States currency. In this respect, probably the euro could make a kind of small rebounds. But let's wait a little bit and react. Let's wait for the real kind of movements during the week in the euro currency, and after that make a kind of conclusions. Dollar yen, after a small impulse higher during previous trading week to the new highs of the year of 112.39, now is trading around 111.65. We were taken out from our short position in the dollar yen, but anyway we resold the pair on the move after the United States gross domestic product data on the move above 112. We continue to suggest that overall there is a kind of important resistance located between 112 and 112.50. Of course, the situation at the moment is bullish, generally speaking bullish for the dollar yen. First of all, we are above a kind of medium-term uptrend line located at 110.60, 110.70. We continue to be above of moving average 200 daily line that's located today at the moment. Let's see where it is. Chart price, excuse me. It's 111.50, so for sure we should close below that level to save another move to the downside. At the moment, anyway, the dollar yen is above that line, and that's why, also taking into account the low liquidity and absence of Japanese market participants because of a long holidays in Japan, we continue to suggest that the room of another move to the upside for the dollar yen is looking limited now. And in case of increased of market volatility as well as risk aversion fears associated with probably weaker United States economy in the future, in case of, for example, if today's PCE price index will comes in below expectations, if Jerome Powell is much bearish than the market expected, if United States payrolls report is lower than expected or even much lower, of course in that case we should expect that the dollar yen could really tend to the downside. And of course the first layer of important barrier to watch to the downside is immediate kind of uptrend line located at 110.65 with important of course important support around the lows of March 29 or March 109.71 together with important psychological barrier 110. As regarding the cable, continue to be below its downtrend line located at 130.15. Also don't forget that during the previous trading week we finally broke below moving average 200 daily line that's located at the moment around 129.62. So we are trading around this line, by the way, at the moment. Not probably not so close, but anyway, there is an important, not a kind of important, but immediate kind of resistance located around the moving average 200 daily line at 129.65. So all in all, the situation is looking at the moment immediately, let's say, bearish, but let's wait how the situation will evolve further during the week. As regarding dollar Swiss, 102.30, probably a kind of stronger resistance at the moment, with another important level located around the highs of beginning of 2017 or the end of 2016, and that level located around 103.35.45. So all in all, the dollar Swiss franc continue to look really very bullish at the moment. But anyway, the kind of short-term correction could be in the cards. But in case of some gloomy economic numbers coming from the United States. So also here we need to wait a little bit. A kind of important support barrier is located around 100.25, a kind of immediate kind of uptrend line, but altogether with the parity level could express a kind of psychological important barrier. All in all, we suggest that we could sell the pet 102.30 with a kind of stop loss of 20 points. But at the same time, we could use a kind of pullback to the level of parity level to enter a fresh long position. For those of you, dear friends, who are looking to any kind of opportunity in the euro crosses, here it is. By the way, we decided on Friday to close our average short in the euro Swiss, accumulated at average price of 114.25. We closed it at 113.60 on a dip on Friday. Now we suggest that it's time whether to sell or to buy the pair. Let's see the situation with the euro Swiss. Euro Swiss has a kind of important support barrier at 112.50, 112. We suggest that any kind of movement to below 112 could attract some attention of the Swiss National Bank, and we suggest that for sure this move in the euro Swiss from 111.60 to the highest of 114.77 we witnessed during previous trading week was because of activity of the of the Swiss National Bank. And once again, we told a lot of times that the level of 115 should present by itself a kind of important resistance barrier, and while below that level the situation is not so welcome for another impulse to the upside for this type of currency, because overall the situation is not so bad for the Swiss franc. All in all, now we are not far from a moving average 200 daily line. We were around 111.50 during Friday movement, but at the moment a moving average 200 daily line located at 113.47, and while below that level the situation is not so bad for the euro Swiss as well. And for those of you, dear friends, who are looking for any kind of opportunities in trading commodity block of currencies, here it is. By the way, we used move to below 70 level to increase our long position in the Aussie dollar. At the moment, the Aussie dollar is trading around 70.50, but all in all, while on the closing basis we are above the psychological important barrier of 70, we suggest the situation should be not so bad for the Aussie dollar, and it could easily come to its moving average 200 daily line located at 71.77. By the way, we should understand that here the situation in the Aussie dollar is looking especially tricky at the moment, because you see that the so-called range is tighter and tighter, and that means that important move whether to the upside or to the downside is in the cards at the moment, and probably wait for us in the near-term future. Thank you for all of your attention, our dear subscribers. We will be back to you in a Russian version tomorrow the same time. Bye bye for now and take care.